I'm going to be looking at some of your trading losses. And as I say, guys, always, I don't have the statistics of all strategies, and I can't tell you exactly if your strategy will work on the long term or not. I can pinpoint you in some of the directions that why you lost, so you can write it in your journal. And if you see this pattern happening over and over again, if I analyze your trade right now and I tell you why you lost and you understand the reason, and then you go and you look at your previous trades or your next, let's say, 50 trades, and you realize that when you lose, this reasoning, this pattern is happening over and over again when you lose, then you should do something about it. It doesn't mean that if I say something that you should exactly go directly and change your strategy, as statistically I don't know how your strategy behaves, as I don't have the statistics for all strategies. So only take into consideration my advice, write it in your journal, and see if it's something that's happening over and over again. Keep an eye on it, and if it's happening over and over again, then you need to fix it. So let me start with this trade right here. Now with this trade right here, it's very clear to me that you were trading this order block right there, and the market left this order block, came back to it, touched it, and you're trading the second touch. So you're trading a double bottom, and if you have watched any of my content, you'd know that a double bottom for me is liquidity. So you're trading in a place where there is liquidity, and even an order block is liquidity. So we have an order block right here combined with this double bottom right there. So we have huge stop losses down there. We have the stop losses of those double bottom traders that are buying in the same area you are, and we have this order block traders who are buying in the same area you are as well, and they're placing their stop losses below here. So we have a huge stop losses to the downside, and all that happened right here is that this push through to the downside was actually to grab these stop losses right here. Now I'm not saying that you shouldn't trade order block, I'm not saying that you should never look at double bottoms. All I'm saying is you should be aware of the fact that they are liquidity, and you should take your precautions. For example, if you're trading an order block and you see a double bottom at the same time, now you have two liquidity instead of one. So you should try to avoid this scenario, and all avoiding rules should be implemented in your strategy so you can have a certain edge. And therefore, one of your avoiding rules, for example, could be that if there's additional liquidity like a double bottom or a trend line to your order block, then you wouldn't trade it. This is one avoiding rule that you could implement, backtest, and see if that works with your strategy. Now my second pet peeve with this trade is simply how tight the stop loss is right here. Guys, when you're using a very famous retail trading strategy, what you want to do is allow the market to grab liquidity, to grab a certain swing low before moving into your direction. Because what you're asking the market right now, you're asking it to exactly at your entry start going through to the upside without grabbing any liquidity through to the downside. So you're asking for a lot. Now what I ask the market to do is to simply go into my direction, and if it wants to grab liquidity before going in my direction, I will let it do that. So if you're using a famous retail trading strategy, which you could be liquidity, most people will place their stop losses below here. So you can avoid you being grabbed by simply just increasing the size of your SL in a way where this swing low is at least in the middle of your SL. So your SL right here should be increased by at least double the size, in my opinion. So if they wanted to grab this stop losses right here below this order block, they'll grab it, move in your direction without you being grabbed, because you increased the stop loss size, which is very important to avoid being liquidated. It's one of the things. If you couldn't create your own strategy where no one is using it but you, what you can do is at least place your stop loss in another place, in a way where everyone's placing their stop losses in a place and you are placing it in another place. So therefore, if the banks want to liquidate something, they'll liquidate all those traders. However, you will be safe because you placed your stop loss in another place, and this way you can maybe avoid it. As I said, verify everything statistically and see what's happening with your previous trades in your journal and everything like that. Now let's go back. I guess that was like a spread thread, so I'm not going to go into it. Let's go into this trade right here. Now what I have a very big problem with this, simply the stop loss right here. I don't get the entry. I think you're trading this imbalance right here. You're trying to enter at this imbalance. However, you're not even allowing the market to grab this swing high right here before pushing through into your direction. You're not allowing the market to tap this order block before moving into your direction. You're asking the market just directly at the imbalance, you should go down. This is what you're asking the market. So you're asking for a lot, and the market doesn't owe you anything. So you should at least increase your SL size in a way where at least, brother, at least let this order block be tapped. So you're at least safe from the market tapping the order block and then moving through to the downside. This is a very tight, unreasonable SL right here. And in my opinion, this SL should be at least above the swing high right there, at least. So this is also my opinion on it. Now, when it comes to liquidity, we can clearly see that there's this trend line forming through to the downside. 1, 2, 3. Look at this trend line right here. And we can also see we had this tops right there. We had one right there and then the top right here. So we have some liquidity through to the upside as well. So you want to enter at this imbalance. It's okay if you want to trade imbalances. However, check for liquidity. And this is all I teach basically. I'm not teaching you an exact entry strategy because I don't want to make my strategy famous. However, at least I'm trying to teach you some rules to implement in your trading that could increase the chances of any strategy working. If you want to trade imbalances, that's all right. However, look at other things as well. There's a trend line, there's a double top right here, and then there's an order block right there. So check for liquidity, and that SL also check it as well. So let's go into, I hate it guys when you send me, by the way, those screenshots from phones because they're very hard to look at. However, if I were to guess what's happening here is I would say that you had these stops right there and you think that these stops were grabbed, which is all right, and then the market pushed through to the downside and you were waiting for the market to grab the liquidity of this trend line. Now the way that I would look at it is that you entered very late. Simply that. Now this is the trend. There's a trend line right here through to the upside. As you can see, 1, 2, 3 touches of this trend line right here through to the upside, and we have this break of trend line right here. So what happened here with this white candlestick is that the market touched the trend line, went through a little bit through to the upside, and then started pushing through to the downside. So it convinced traders to buy here, place their stop losses below here. So what happened with this push through to the downside, we grabbed the liquidity of this trend line right here through to the upside. So you're entering after liquidity has been grabbed because you're hoping for more liquidity to be grabbed, which in my opinion, you're a little bit late. Now I can't look exactly at your entry because I can't really see what's happening here. So just please guys, send me from a laptop, a more zoomed in perspective for me to be able to look at everything. I can see that you have biases right here, grab liquidity to the upside and right there. But at the entry, I cannot really see it in a zoomed in perspective because you're simply too far away. So I cannot really see. I can see that right here. If I look really close, I can see that there's a double top. And usually above this double top there's going to be SLs above it, but I can't really know if you're trading a double top or you're trading an order block or what are you doing exactly, so I give you the right advice. Anyway, in this trade right here, it's easy for me. There's simply a double bottom right here. As you can see, there's this wick right here through to the downside. It touched this area right there, so there's a double bottom, and then there's this trend line through to the upside. 1, 2, 3 touches of this trend line through to the upside. So there's a huge liquidity to the downside. There's also, after this impulse right here, there's this order block that people bought, placed their stop losses below here. There's also this double bottom, stop losses below here. So there's a huge liquidity. As I said, you can use any strategy that you want. However, make sure you pay attention to where the majority of the liquidity is. You will never be able to trade in a direction where there is no stop losses. There's always going to be stop losses above and below in the market. However, you at least want to look at where the majority of the liquidity is, where the majority of the stop losses are before taking a trade. Now, as I go through, this is a bad picture, please screenshots, TradingView links and send them on Discord because this is somewhat hard for me to see. However, okay, you thought that this right here is a change of character, and usually people mix change of characters with liquidity grab. Now I would rather that everyone looks at the market from a liquidity grabbing perspective. As you can see, there's a huge double bottom here. If you want to trade in change of character, that's okay, as I said, but there's a double bottom here. So try to avoid it when the change of character actually happens as it's grabbing a double bottom, because what could be happening here is simply accumulated the stop losses of those traders and then the market started pushing through to the upside. Now if this was a normal just swing low, so the market pushed up, went down, and then pushed up without forming like a double bottom right here, all this consolidation right here, maybe it would be better to trade a change of character. You should backtest it as well. However, when there's a double bottom, maybe you should avoid it. Try to see it with your previous trades that you lost. Try to see if there's a double bottom and you look at it as a change of character if you're losing or winning a majority of the time. And this stop loss, just allow at least this swing high right here to be grabbed. So you enter here, stop loss should be, for example, somewhere right here. So you allow this swing high right here to be grabbed at least. Now let's go as well. Same advice. Now this is, you're trading exactly at a double bottom place right here. I don't know if your entry was this right here or this right here. If it was this right here, you're trading exactly at a double bottom area. If it's this right here, I can't really see the market. Maybe if you sent a more of a zoomed out perspective, like two pictures, one on the 30 minutes time frame and one on the 15 minutes time frame, I could have seen at least where you drew that box from, so I could give you some advice. However, I also have a small comment. As usual, stop loss is very tight. I know that you guys are getting this from social media, from Instagram, from all of this stuff. However, the stop loss, whenever you enter with a tighter stop loss, guys, you're asking to be liquidated. You're asking the banks to grab your liquidity. And guys, this is all a plot from the banks. A plot, all of this, place tighter stop losses, all of that, and they are convincing you with it. This is all a plot from the people who have the most money. Because whenever you place tighter stop losses, it's easier for them to grab your liquidity. So stop doing that, guys. Stop listening to those things, because as I told you, this is all a plot for them to have you as easier liquidity, and you're giving them that. So stop giving them that, protect yourself, at least let a swing high be grabbed before the market moves in your direction. Let it be hard for them to grab your liquidity. Don't make it so easy. Let me check this. It's basically the same. However, you traded this right here. And I don't know exactly how you're trading. Usually people would buy this order block right here instead of this one right here, or I don't know if you're trading a break and retest. I can't really see what's happening. I can't really give advice on that because I don't know exactly what your strategy is, and at the same time I think it's something that you need to backtest. I think this is a very early entry. I think this should be lower here, even if you lost, even if you would have both cases lost. However, I think this is a very early entry to enter through to the upside, and very late entry for this push through to the upside. So what I mean by that, the market pushed, you should wait for a retracement at least more than 50% in my opinion before trying to enter. What you're doing right here, you're entering very early, and the market already pushed through to the upside, and you're basically entering as soon as the market is showing like some signs of retracement. You're entering, which to me isn't a very good idea. For me, at least you should wait for more than a 50% retracement, so increase the odds of the market pushing in your direction. So phone, I'm not going to even bother. Okay, phone, and like, how do I analyze this, guys? So please just laptop, less stuff on the screen so I can see what you're looking at. This is, I can't analyze this. Look at how like zoomed in is the entry right here as well. I can't even see what's happening. So that's it. Now what caused that loss? I can see that there's a 3 drive pattern right here through to the downside, and if you look at any of my content, you'd know that I try to look at those 3 drive patterns as a pattern where the market will reverse. We have 1, 2, 3 right here, and then the market reversed and took out this high. This is what happened. This is basically a very common pattern that I also like to trade. So I think this is just what happened here. You should take care of those 3 drive pattern things before trading, and usually people like to trade those. There's a trend line right here, as you can see, 1, 2, 3 touches of this trend line through to the downside. So we have liquidity through to the upside. We have this double top as well right here, 1, 2, liquidity through to the upside, and so there's a lot of liquidity right here through to the upside, and there's almost none to the downside. Of course there's always stop loss to the downside. However, the majority of the liquidity is to the upside. So there's 2 reasons right here. The first reason is the three drive pattern, 1, 2, 3. And then the second reason is simply the trend line right here through to the downside, the double top, and when the market pushed like that with an impulse, it left this order block, which also formed liquidity with them. So we had three types of liquidity right here through to the upside, and they were all grabbed with this push through to the upside. Now, I would say be careful when a three drive pattern already happened if you want to trade in the same direction of the market. So this is going to be basically the same advice for some of the trades that I said before, so I'm not going to bore you guys. Right here, just I have a problem with the SL. I think that this is somewhat of not a mistake in my opinion, because as you can see there was a double bottom here, and this double bottom was grabbed with liquidity, and then you traded the market in the same direction where the liquidity was grabbed. I might think that this is somewhat of a late entry because the market already pushed a lot through to the upside and you're trading here. However, my only problem with that is that tight SL. This is it. And basically, if I were to look at the market, I'd see that there's this trend line right here through to the upside. So there's a huge stop loss to the downside. There's these bottoms right here. The market pushed right here, left this order block as well, and this order block as well, and left imbalances to the downside. So there's a lot of reasons why the market might go through to the downside. However, I'd understand if you looked at this double bottom and you said, oh, this double bottom was grabbed by this push through to the downside and it's going to continue in that direction. The problem that I have with this is the tight SL here. Now I can't really know, but oh my god. So deposit 249 and lose 212. This is not a strategy problem. Guys, you should understand this. When you have such a history, like you deposited $249 and you lost $212, this is not a strategy problem. You don't have a strategy problem, you have a risk management problem. Why are you risking more than 0.5 or 1%? Why? Because there is no way you're risking 0.5% and you just blew 100% of your account, because it means that you lost more than like 200, you lost almost 200 times, even more than that. So it doesn't make sense if you have good risk management to have such results. Guys, if I use a flip a coin strategy, and I might do a video of it just to prove it, I'll use a flip a coin strategy for like 2 weeks with good risk management, I'll be around break even. I'm not telling you I'll be the most profitable trader, but I'll be around break even. This doesn't happen when you have good risk management. This is not a strategy problem, this is a risk management problem. That's it. So basically, guys, that's going to be it. I think I spent like 10 minutes talking. I don't know. So that's going to be it, guys. Now, I'll see you in the next video, I guess. Make sure you subscribe if you want to follow up with me. And I do a Q&A session, by the way, almost every day on Instagram. So feel free to follow me there also if you'd like to participate in it or listen to what people ask me and what do I answer as well. I'm going to do another video where I answer the Ask Me Anything questions, hopefully soon. And that's it, basically, guys. So see you soon, guys.